Today on Fear-Free Passive Investing, we are talking about investing in land notes and much more. Stay tuned.
Welcome to Fear-Free Passive Investing, where we help you conquer your financial fears and unlock the secrets of passive wealth creation in real estate. Get ready to break free from fear and embrace a life of financial freedom. Here's your host, Luke Miller.
Hey everyone, hope everyone is doing well. This is Luke Miller with Fear-Free Passive Investing. Thanks for tuning in. I hope you're all doing very well. I'm doing well as myself. We've been busy this week. Lots of new land coming in. Lots of opportunities that we're looking at. I think my acquisitions guy, got a deal under contract yesterday, and this woman had told us that she's been mailed, contacted quite a bit about her land in the past. So clearly competition is high out there right now, but we're still pulling deals out. So it's a good week. I'm possibly working on a couple subdivision deals that might pan out. So all things considered, we're doing well. But today is kind of a fun episode because this is one of the huge benefits of investing in land or just in affordable real estate in general, if you can find it, is investing in notes. And so originating your personal mortgages. So it's a great strategy that is fairly passive, I would say. I still deal with it quite a bit. So it can't be passive, but just like anything on the show, we always talk about how there really is no passive way to invest in real estate. And despite what, most people would say. So, but we're going to break things down, hopefully get some of that fear out of the way so you can explore the strategy and maybe look into it a little bit. But first, I just want to say, if you are interested in anything that we're talking about, or you have questions about anything, feel free to reach out. My contact information is always down below or somewhere, but I'm pretty easy to get in touch with. Facebook is probably the best way to do that, or going to mysimpleland.com and schedule a call there. I'm an open book, so I'm happy to talk about all this stuff. So with that, let's jump into the show and talk about notes. All right, so let's start by just talking about what is a note or a personally originated mortgage, or what exactly that means. So when you buy a piece of real estate and you're using leverage, you are essentially borrowing that money, and you're assigning a deed of trust or a note or a promissory note or some sort of piece of document saying, I am going to pay this back. And the promissory note usually describes how you will pay that back, typically monthly payments or quarterly payments or whatever the note describes. And so the person who owns that security in that real estate will essentially be the receiver of that leverage or of those payments, and will agree to finance that out over a period of time. And all of this is described in an amortization table and a note. And you do, in this circumstance, you would transfer the deed to the new owner. Just like when you buy your house. I think most people are pretty familiar with that process. You purchase your house, you are given the deed, you are the owner on record. You are in charge of all the repairs of the real estate. You are in charge of paying the taxes, maintaining the property so it doesn't go into foreclosure, or you don't get liens from the HOA about your weeds, things like that. You're still in charge of all of that, and the property is in your name. It's deeded to you, but do you really own it until you pay off that note? And I guess that's really the benefit of that is there are ways to push your money out and leverage it with very little risk, and very little ongoing maintenance, and You collect those payments every single month. I pay my mortgage every single month. Somebody owns that note on the back end of that. It's a bank. But in most cases, it could not be a bank too. And so how this goes in land investing is we will purchase a piece of property. Typically, like we've talked about, anywhere from let's do a wide band. I'd say 40%. I've bought properties at 30%, but let's just go 40% to 60% of market value. And you take those and you sell them at 90, 95, 100% of market value. But on the back end, you will finance this for the investor or for whoever's purchasing that piece of land. And so you will say, oh, I want 20% down or 10% down or, 30% down. Lots of people do different down payments. And then they will say, I want an interest rate of anywhere between, 5, 6, 8, 10. I've heard some people do 12% interest, which to me is a little crazy, but, to each their own. And my goal when I originate a mortgage is I want to try and be better than the bank, and not necessarily better in interest rate. I charge a higher interest rate than the bank, but I want to make it easier. I want to make that choice for them an easier one. So we don't always do credit checks. We don't do any sort of origination fee or appraisal fee or any sort of junk fees that the banks love to drag you through. I'm not looking for tax returns. I'm not looking for a lot of this stuff that they require. But in return, I'm going to require a higher interest rate. And because I know the value of the land, I know the piece of land that I sold can be sold again if you stop paying your note. And so, yes, we do have to go through the foreclosure process at that point. And there's two different types that we'll talk about in just a second. But there's the way I do it, and then there's another way, which is the way I used to do it. But the main idea of that is if you have a land note, we secured and purchased that piece of land far below market value, sold it close to market value, and are now financing it at an interest rate that will yield us much more than if we were to have just sold it cash. How does this work on the back end? How do you purchase a piece of property, sell it on terms, or sell it owner financing, and how do you make your money? Well, if you purchase the property correctly, you are typically recouping a lot of your profit or a lot of your purchase price back at the closing table when the person puts 20% down or 30% down. Hopefully, you're getting half of that back. Now, if you used a broker and you have closing costs, you're going to have fees that push that down, and you won't actually get a true 20% down. But you're making enough on the back end to not come full out of pocket for that property, typically, and you're immediately going to start receiving payments on that the very next day, or the very next month, excuse me. And so when you originate that mortgage, your cash outlay is higher. However, every single month that they pay, you're recouping your initial investment back. And my goal is usually to try and get all of my money back within 2 years. For example, I'm originating a mortgage next week. Excuse me. I'm purchasing a piece of property for $15,000. I'll be all in around $17,500 with closing costs and other fees. So I have to come up with $17,500. But the seller, I'm purchasing that from the seller, and I immediately have another closing right after that where someone is purchasing it from me. It's called the double close. And so that person is putting $3,000 down and paying closing costs, and then will pay me about $500 a month, a little bit over $500 a month for 72 months. So that will recoup my money in a little less than 3 years. So it's not quite as great of a deal as I would like, but It's also an extra $500 coming into me every single month, and all I have is $16,000 out on that. That's a pretty good deal. And so, as a passive investor in that, there are options where you could just provide that money and we could split cash flow. That's one way I've done it. Or if you are one type of investor who doesn't want the note, you can do what's called a note transfer or selling the note. So this is kind of a really cool and unique. Maybe it's not so unique to the land space, but it's most common right now in the land space that I've seen because the real estate can be bought so affordably. We can sell these notes on the back end and even at the closing table. So if you and I are joint venturing on a property and we both decide we don't want this seller finance note, we don't want to hold it, we don't want to keep it, but that's really the only way we're selling the property, we can sell that on the back end. And so what that means is there are note buyers out there that are an entire niche in and of themselves that buy land notes, buy notes in general, that we can take this to the third party and say, hey, here's this note. It's good for 7 years, 6 years, whatever. They paid their down payment. We're keeping the down payment. You can give us 60, 70, 80% of the note value and in cash, and we transfer the note to you. We sell the mortgage. This has probably happened if you own your house. Your mortgage has probably been sold a couple times. Mine has, I think, probably 2 or 3 times by now. And so you have the opportunity to sell that and recoup some cash if you don't want to hold that note. It's a great option for someone who wants to end a partnership quickly. It's a great option for someone who wants to create liquidity in their business and just sell a note real fast. I think that's how most land investors use that right now. I personally love having mortgages. I love having the money coming in every month, and I think it's minimal work for me. And so I don't like to sell notes. And I don't want to sell notes right now, but I don't necessarily have a liquidity problem right now. I might in the future, so that might change. But passive investing in notes is a really good option. And if you have a significant amount of money that you're able to put out, I would say there's a huge opportunity for you in investing in these notes. These are notes that are very easy to foreclose on if for some reason someone stops paying, which it does happen. It's happened a couple times to me, but it's really a very easy situation to remedy. It's not like someone's living in the house. Typically, they're not living on the land, but it does happen, I suppose. But it's a very easy process to repossess the land and then resell it. And so I think the security in the note is very high. But if you have a bunch of money and you want to deploy it into notes, reach out and I can point you in a direction of how that might work for you. But this is something that I think a lot of people are not looking at right now that really should be. So it's certainly something you should be looking at. Are you interested in investing alongside me in future land deals? At My Simple Land, we offer long-term secured notes, short-term joint ventures, and specialized value-add projects where you get to share in the revenue. If you're interested, visit mysimpleland.com/invest for more information or to schedule a call with me. All right, so to recap notes in land investing, in the passive investing in notes, I think there are higher returns that you're going to get for sure. It's a way to diversify your portfolio a little bit. You don't have to have your entire net worth in land, but I think it would be a great diversification because that is monthly cash flow coming in. You have the control and the flexibility of, how many notes you purchase and what those notes look like. You get to choose because there are different ones, different interest rates, different terms, different lengths. You can choose one that's had seasoning and one that's not had seasoning. Typically, if a note's been seasoned for a couple months where the person has paid for a couple months in advance, you're going to pay a little bit more for that because there's reduced risk. They're more likely to continue to pay in the future. So that reduces your volatility. And you have a direct relationship with the actual person that is purchasing your land or purchasing it from you as the note holder. So I really do think there are huge benefits to this. And, there are certainly downsides to it as well. But I really do think that this is a passive way to invest in real estate, not the only passive way, but this is much more passive than a lot of other investments and much higher returns. So, I would encourage you to explore this. I certainly hold a portfolio, so I can help answer questions if you need it. I would consider that. All right, everyone. If you enjoyed today's episode, don't forget to like and share or review the show. It helps a lot, and it will help grow this and potentially change someone else's life. So I encourage you to do that and reach out with any questions. But thanks, everyone, and I will talk to you on the next one.